Hello everyone, welcome back to Stock Market Meridian. Today is June 30th, 2026 and you're watching today's post-market report. Let's begin with today's market action. Today once again, our markets closed in negative territory with around 0.3% losses. The major reason behind today's weakness was the heavy selling pressure in the IT sector. Today's top losers were mainly IT stocks including Infosys, TCS, Wipro and HCL Tech. Along with them, Eicher Motors and Tata Consumers also ended amongst the major losers. On the gaining side, top performers were Maruti Suzuki, Titan, Adani Enterprises, Bajaj Finance and Tata Motors. Now let's understand why IT stocks fell sharply today. The Nifty IT Index crashed nearly 2.7%, with major companies witnessing heavy selling pressure. According to Reuters, the primary reason behind this fall is renewed concern that US interest rates may remain higher for longer. Since North America contributes the largest share of revenue for Indian IT companies, so higher US rates are becoming a concern. Because of this, global companies are delaying discretionary tech spendings and reducing IT budgets. Sentiment was already weak after Accenture's weaker than expected guidance last week, where the companies clearly indicated that clients are delaying large project decisions. Currently, investors are making a clear distinction within the tech space. On one side, US markets are rewarding AI related hardware companies such as semiconductors, memory chips, and data center businesses. But on other side, traditional IT services companies, especially those depend on software development, maintenance, and consulting, are witnessing selling pressure. Now moving to another major reason behind today's weak market sentiment. Geopolitical tensions. Diplomatic negotiations between Washington and Tehran have once again paused. Both Iran and US were expected to attend a key meeting in Qatar regarding last weekend conflict. However, that meeting did not happen. Latest reports suggesting diplomatic teams from both countries were expected to travel to Qatar for important discussion later this week. But Iran has officially stated that no such meetings has been scheduled. Instead, Iran clarified that this delegation is traveling only to discuss access to frozen financial funds. This indicates the situation is becoming more complicated. On one side, the US appears ready for talks, while on other side, Iran seems to be ignoring direct negotiations. Because of this, war-related tensions and Hormuz concerns are once again rising, keeping global markets cautious. Now let's move to today's key specific updates. Before moving further, a quick reminder. I upload pre-market videos every single morning before market opens and post-market videos every evening after market close. So if you don't want to miss any market updates, make sure you stay connected with Stock Market Meridian and please subscribe to the channel. Now let's continue. First update is regarding Delhi's EV policy and commercial vehicle modernization. We have already discussed Delhi's new EV policy in yesterday's post-market report. Now the government is taking another aggressive step. The central government is preparing to launch a major scrapping incentive framework to retire old trucks and buses across the Delhi NCR region. The main goal is reducing vehicular emissions and modernization commercial fleets. In a major boost, Delhi and Haryana have approved 100% road tax waiver for buyers purchasing clean fuel commercial vehicles. Rajasthan and Uttar Pradesh are also expected to announce similar waivers soon. Capitalization on this opportunity, Force Motors has signed an official pact with the Road Ministry under the Delhi NCR Commercial Vehicle Modernization Scheme. This puts Force Motors' clean fuel and EV lineup directly in the focus. And another major beneficiary could be MSTC, as thousands of old vehicles move towards mandatory scrappage. Auction volumes for scrap metals and end-of-life vehicles could rise sharply. This policy could significantly benefit both the commercial vehicle industry and recycling sector. Next update is from Maruti Suzuki. Maruti shares surged nearly 5% today after global brokerage from Jefferies upgraded the stock from hold to buy. Jefferies raised its target price from 13,800 rupees to 16,500 rupees per share, indicating strong upside potential. The brokerage highlighting several positive triggers including strong passenger vehicle demand, easing crude oil prices, and softened metal costs. These factors could directly improve margins. Following this upgrade, Maruti added nearly 20,500 crores in market capitalization in a single day. Next update is from Dixon Technologies. The much awaited partnership between Dixon and Vivo is now in its final stage of approval. This joint venture was on hold since December 2024 due to an ED investigation related to Vivo. Now the central government is in the final stage of issuing official approval. Once approved, Dixon will take up major manufacturing responsibility for Vivo smartphones in India. This could significantly strengthen India's electronics manufacturing ecosystem and provide long-term revenue visibility for Dixon. Next update is from Shilpa Medicare. Shilpa Medicare's subsidiary Shilpa Biologicals has signed a landmark agreement with Finland-based Orion Corporation. Both companies will jointly develop and supply a biosimilar version medicine, one of the world's leading cancer immunotherapy drugs. This partnership becomes highly important because original drugs patent exclusivity is expected to expire in Europe. To understand the scale, this medicine generated approximately $4.1 billion sales in Europe in 2025. Under this agreement, Shilpa Biologicals will handle product development and manufacturing from India. Orion will manage registration, marketing, and distribution across Europe. This deal could provide long-term revenue along with milestone-based payments. And next update is from Unimec. Unimec has secured a major international contract. The company signed a long-term supply agreement with FACC operations in Australia. FACC is one of the world's leading aerospace suppliers. Under this agreement, Unimec will manufacture and supply precious aerospace components and critical flying parts. This contract was awarded after a highly competitive global sourcing process. This marks a major achievement and opens up long-term revenue opportunities. Next update is from Cycle India. Today, Cycle India received two major developments. First, its subsidiary signed a major power agreement worth around 1700 crore rupees. And the agreement is with Reva Ultra Mega Solar Limited for a 220 megawatt solar project in Madhya Pradesh. This project includes both solar generation and battery energy storage systems. And the tariff is fixed at 2 rupees 70 paisa per unit. Also, the construction timeline is 18 months followed by a 25 years operational period. And second update is Cycle India has emerged as the lowest bidder for Delhi PWD road project. The contract value stands at approximately 331 crore rupees. This project involves strengthening and maintenance of roads under South Delhi Maintenance Zone. Next update is from Suzlon Energy. Suzlon has secured a major 105 megawatt order from Sunsure Energy. This is especially important because it is the first commercial order for Suzlon's newly launched S175 5.0 megawatt turbine platform. Under the agreement, Suzlon will supply and commission 21 next-generation wind turbines in Karnataka. The S175 is currently India's tallest and most powerful wind turbine. This order strengthens Suzlon's leadership in renewable energy. And next update is from Kalpataru Projects. Kalpataru Projects has secured major updates across its power transmission and distribution business in both domestic and international markets. The total order value stands at approximately 2,957 crore rupees. Additionally, its water business has entered the Middle East market through a new project win. This marks a major strategic milestone for the company. And final update is from Transformers and Rectifiers India Limited. The company has received an ultra mega order from Power Grid Corporation. This order is valued at around 1,000 crore rupees or above. The company will manufacture transformers of multiple rating along with associated technical works. And the project is expected to be completed within the next 30 months. This massive order significantly improves revenue visibility for the company. So that's all for today's post-market report. If you found this video useful, make sure to like, share and subscribe to Stock Market Meridian. I will see you in tomorrow's pre-market report video. Thanks for watching. Signing off. Bye bye. Jai Hind.